Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news bond yields are likely to stay low for a very long time, despite rising interest rates. But first, in the US, their final reading of fourth quarter 2016 GDP brought a revision higher to 2.1% on stronger growth on consumer spending. That was up 3.5%. Offsetting that somewhat was a rise in imports. It turns out that the December 2016 quarter was the second best result in 6 quarters and third best since the third quarter of 2014. This was a result that was better than markets expected. But somewhat dampening the party were higher than expected jobless claims, even though they were lower than the week before. Bond investors who need investment-grade paper are facing a long, low-yield future. Regulations in a range of first-world economies aimed at making the financial system safer mean that bank insurers and pension funds need sovereign bonds to meet liquidity requirements and match liabilities. This month, more rules came into effect in the US and Europe that could make demand even stronger. Even as benchmark interest rates rise, pushing up loan rates, bond buyers need long-term debt, and that need is growing, meaning investment yields on them are likely to stay low. That drive for financial stability is also driving down CDS spreads, especially for Australasian investment-grade debt. Not only are American CDS spreads at their lowest in almost 2 years, ours are at their lowest in over 9 years, and as far as we can tell, the premium over similar US bonds is its narrowest in 8 years. In China, they announced their 2016 current account result with a surplus of 1.8% of GDP. The goods trade surplus declined 14% from 2015 level of almost $500 billion, while their services trade posted a deficit of $244 billion, 12% higher than a year ago. In the UK, insurer Lloyd's of London has confirmed the opening of a Brussels office in 2019 and is shifting some jobs there. In New York, the US Treasury 10-year yield is up a little today, now at 2.42%. Oil prices are up again today, just over $50 for the US benchmark, while the Brent benchmark is just over $52.50 a barrel. New fracking techniques are allowing independent producers to stay in the game at prices that undermine the traditional crude oil and gas drillers. The gold price, however, is down another $8 to $1,244 an ounce. And the New Zealand dollar starts today at just a little over 70.1 US cents. On the cross rates, the Kiwi dollar is at 91.5 Aussie cents, and against the euro, 65.5 euro cents. The TWI is at 75.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.